When I was studying for my life insurance license, my mom told me a story about how her and my dad lost a lot of money in life insurance. And unfortunately, the story that she told me is not isolated. Every single week, I get a handful of people who call me and have the same situation happen to them, where they have lost a ton of money because they did not understand a few things about the type of life insurance that they had. Now, for context, I am an immigrant. I moved here with my parents when I was very young. And like many new immigrants, my parents were just trying to make $1 out of 50 cents and just figure things out with the little money that they had. And even though they did not have a ton of money, like, they did want to make sure that they had life insurance so that if anything happened to them, us, their kids, would not be out here scrounging. As they were looking for different policies, they were just looking for the best deal. Their goal was just like, what is the cheapest insurance that I can get and get the most amount of life insurance? So they ended up settling on a $500,000 policy for each of them, and they paid for it for years. All good. They felt like they were doing a good thing, making sure the mortgage was covered, making sure if anything happened to them, like, we would be able to pay for the burial, pay for the house, and all these things. So fast forward 20 years later, they have been paying into this. They are not worried about it. They feel like they're good. And then they get a letter from the insurance company saying that their life insurance is going to be ending. By the way, they have been paying for 20 years. They have not missed any payments, so this is a bit of a surprise to them. What they did not understand is the type of policy that they had was a temporary policy. And so many people call me and they are not aware of this as well. So with a temporary policy, which specifically is called a term policy, you are only guaranteed to have life insurance and only guaranteed to have that payment amount for the specific amount of time that you agreed to at the time that you got this insurance. Could be 10, 15, 20 years, 30 years, right? Your insurance is only for that specific amount of time. It's kind of like leasing a car. So if you're leasing a car, it's yours, you're responsible for it, it's gonna do everything you need it to do. But at the end of your lease period, you gotta bring it back to the car company. Similarly, with the end of your contract period with the term policy, that policy is now owned by the insurance company again. Like, you no longer own it, you no longer have insurance coverage. My parents are paying a little over $1,000 each for that $500,000 each of coverage. And at the end of their contract, they had the option to continue that policy, but it was no longer going to be $1,000. It was now going to be about $12,000 a year, which did not make sense to them. So if you have a similar type of policy, where if you have a term policy, you do have the option of continuing that policy, but you're not going to be continuing it at the same price of what you had initially. Issue number 2 that they were not aware of is that it is very possible to get denied for a life insurance policy. So once that insurance ended, if they wanted insurance coverage again, they had to apply again. So what is the big deal if you have to apply again? So nobody is entitled to life insurance. And a lot of people that I speak to are surprised. Most people that put in applications and get denied don't realize you can get denied until they're actually denied. And very small things can get you denied. Think of it in the terms of the insurance company. If they approve somebody for a life insurance policy, the moment that that person puts in their first payment, let's say that is $300, if the very next day that person has a heart attack and passes away and has $1 million policy, the insurance company has to pay that full $1 million. As this is a company, right, and we live in a capitalist society, you know that companies want to make money. And so does it make financial sense for them to say yes to somebody that has a good chance of passing away soon? The answer to that would be no. And so if anything is on your record that makes the insurance company feel that there is a higher chance of you passing away soon rather than not, then they are not going to approve you for life insurance. And just statistically, the older you are, the closer you are to passing away. So that's already a risk factor for them. And second, the older you are, the more likely you are to have things on your medical record that are not favorable. So if you're applying for life insurance after your temporary policy has expired, you are now subject to whatever is going on with you at that time. So just because you were approved before does not mean you're going to be approved again, because now the life insurance company is looking at what is happening with you right now, and based on what's happening with you right now is what we're going to say yes or no to. In addition, the price that you're paying for your insurance is now going to be based on your age at the time that you're applying, and also what your health situation is. So just based on your age alone, you're going to be paying more insurance. And then second, based on your health situation, you're going to be paying more for insurance as well. That is precisely what happened to my parents as well. They eventually got permanent policies, but because of their age and because of their health situation, they ended up paying a lot more than if they had just gotten those permanent policies a long time ago, as opposed to getting the temporary one first and then waiting until they're way older to actually get a permanent policy. And just for context, it went from paying a little under $100 to paying a little under $500 just because they did not get this permanent policy sooner. Now, generally, there's two major buckets of a life insurance policy that is temporary and a life insurance policy that is permanent. With temporary policy, whatever you put into the policy is strictly going towards like covering you if something happens to you. So it's similar to you paying for your car insurance. Whatever you pay, it just makes sure that you have peace of mind. If anything happens to you, you are okay, but you don't get any monetary benefits or money back from you paying your car insurance or paying for your home insurance. What that means is all the money that my parents paid for those 20 plus years went towards covering them, which is perfectly fine, but there's no kind of money back that they get from that. Now, the type of life insurance policies that I specialize in, that I custom design for my clients, are permanent policies. So once you get it, you have it until you pass away. Not only are they permanent policies, they're permanent policies where you are able to access cash from inside your policy. So the money that you're putting in isn't just going towards covering you, it is also going towards building a personal bank that you can pull from and use to do whatever you want. Not only does it provide life insurance until the actual day that you pass away, it also allows you to have access to cash that you can use as an emergency fund, as a retirement fund, as a kid's college fund, really anything that you could use a savings account for, you can use this for that as well. So if my parents had one of these types of policies at the end of 20 years, not only would they still have life insurance and continue until the day that they actually die, they also would have had a significant amount of cash in their policy that they could take out to do whatever they want with. Now, these type of policies where you are able to grow cash in them and use that cash are not off-the-shelf regular policies and are not available everywhere. This video right here walks you through exactly how they work, how they're designed, so you can have a better idea of whether or not this is a better fit for you than a temporary policy. I'll see you there.